It's go time, my friends, for the Bitcoin halving. Going to take a quick look at what to expect this weekend. Hey, guys, it's Keith Allen. Been a busy banger of a day. Hope you have enjoyed it and hope you are ready for the weekend. Of course, halving coming down on us very, very soon and literally less than 2 hours, it looks like. Just real quick, throw out a bit of housekeeping here. I'm not a financial advisor. I don't provide financial advice of any way, shape, or form. Nothing I say or share should be considered financial advice or trading advice. Do your own research, manage your risk. This is a risky game. Never risk more than you can afford to lose. All right, with that, let's just dive right in and take a look at this countdown clock. This is kind of exciting for me, man. I mean, this is a historic thing, right? Happens every 4 years. This is only the third time ever, and now we're watching it. We're watching it go down in pretty much real time here, right? So here's the countdown clock ticking away here, and it says an hour and 26 minutes or so. Obviously, this is an estimate. It says there's 9 Bitcoin blocks to go until the next halving. So, however long that takes, could be faster, could be slower, whatever the case. It's happening. It's imminent, and it's happening any minute. So, pretty cool to be part of history here as this goes down. So let's just start climbing into the charts and see what we see here. Obviously, we had a pretty interesting move last night, and we've seen the recovery here from that wick down to retest local support down here. Our local bottom at 59,000 and change. That varies a little bit on from exchange to exchange, but nonetheless, we have two retests down here. And so far, that support has held. Very, very good to see here. Price right now hovering above 64,000. Obviously, we have strong resistance in this range here with the moving averages, which are death crossing right now. The green 21-day moving average and the 50 and the red 50-day moving average. And if we take this down to time frames as well, we can see resistance here as well. Now, in terms of volatility, and oh man, this is so cool, right? This is so anticipated for so long, and we've been talking about it for so long. So really cool to see this playing out here right now. Pardon me for having that moment. Let's take a look at liquidity because this is what really matters to me, right? We see we've had additional bid liquidity come into this range here, and that's a bullish sign here, right? It's now up to about 40 million. It wasn't long ago that it was at 30 million, and it wasn't long before that when it was only at 17 million. Okay, so it got touched yesterday when we dipped down into that 59 about 59.5 range, and it replenished a little bit. Some floated up, some came back in. We've seen a little bit of jockeying. We've also seen liquidity come from above. We had pretty good resistance here at the 70K level, and a block of that, about $5 million worth or so, has dropped down in here into the active trading range. So with all the liquidity that moves, right, when something drops down like this, once it's gone, it's cleared, right? It's cleared from what bulls have to deal with to get to the upside. Same thing for the downside, right? When they clear it out, it makes it easier to move through those levels. So now we see some front runners coming into this range here. That's a concern that maybe these lower levels won't get hit. So they're putting their bids up in this range. This is all pretty tight here, right? So liquidity does dampen volatility, and that means if this holds, then this could be a guardrail here, keeping things above this 60K level, or at least the 58K level, right? 58 to 60 is this range right here. Fortified right now with about 40 million at this 60K level. That's not a lot, right? But in terms relative to what's here, it kind of is a lot, right? Brightest spot on the chart is here at 53 million. And if we look at history, it takes deeper concentrated liquidity close to the range to get things really moving, right? So we don't see that yet. These blocks are upwards of 100 million, right? 11 million here on this block. This one here, 96 and another 93 stacked below it, and another 58 below that, and another 30 below that, right? So this is like, over 200 million, 250 million stacked here in this range. So we have the depth here, but we don't yet have the concentration of liquidity. But you do see that this area, right, our deepest concentration, and the I should say that the the binning of these ranges is different as we move through time frames. So, right, what was 40 million on the weekly time frame at that level, on this 3-year chart, it expands this range, right? So this is now a, what's that, 60,160-ish to 59,360. It's about a $900 range. It's or yeah, it's 57 million here. So what I want to see, and this is more than we're seeing on the upside, right? So this is a bigger concentration than what we see here at these levels: 39 million, 43 million, 48 million. Not a lot more, but it's more. And what we want to see is even more coming in. We want to see this turn yellow or white, better yet, right? Be a new high level of volume that would be a great foundation for this next leg up. That's what we need to see to break this level, in my opinion. That can appear at a moment's notice, right? Anytime $100 million block could show up. So we may get it, we may not. Um, if it was a couple of $90 million blocks stacking in here, I'd be good with that too, right? But nonetheless, that's what I'm watching. I'm watching to see where the liquidity concentrates. And you can see even here, some of what was here floated up higher into the range here. So seeing more bids moving closer to price or closer to the active trading range, and seeing a higher concentration of volume here is what we need to see to start chipping away at this. And that is the game, right? In the meantime, this should keep us within this range, right? At least until we start seeing more bid liquidity come in here. And to the contrary, it could be a block of ask liquidity that drops down here that pushes price down. And then we're going to revisit these other ranges down here. Let me open up a little bit. And if that happens, then we have to talk about these ranges here. So this is kind of my invalidation, right? I'm holding everything that I've purchased so far for my longer term position, and this would be my invalidation. We lose this 58K level, then I am going to cut my losses on some of these positions from say 65K, and hold that money until we level out and I find an opportunity down here, perhaps here in this 50 to 52K range. And if we lose that, it would be down here in the 44 to 45K range. That's my opinion. That's what works for me. It's not advice. You do what works for you. Just wanted to give you some insight and give you a little update on where the liquidity moved through the day. In my opinion, things are looking pretty strong here as we approach the halving, and it is coming up very, very rapidly. Let me give this a quick refresh and see how much it changes. Okay. So, says an hour and 20 minutes or so. So looking forward to that. I don't know about you, but I'm excited about the weekend. Been working hard this week, and so has my family. So I am going to be giving them some time this weekend too. And I hope that you take the time to, you want to go ahead and set your orders. By all means, get that done. Have conviction with what your levels are. Know what your invalidations are, and then back away from screens. Give yourself some time. Take some time doing the things you love with the people you love. That's going to do it for me, guys. Hope you enjoyed it. If you're getting some value out of these, please, by all means, smash all the buttons and share a comment with me. I enjoy reading all the comments, and I engage with each and every one of them, and appreciate the support you guys have been giving me. Thanks a lot. Appreciate it. Have a fantastic weekend, and we will talk to you soon.